Hello, everybody. This is Samantha from the law offices of Samantha Wolfe, and today I'm here for our next virtual seminar. We get to talk about inheritance tax today, so I'm very excited about that. I love when we get to talk about taxes. So let me go ahead and share my screen. So today we get a bright pink background. We're going to look at Pennsylvania inheritance tax as our virtual seminar today. I'm trying to break down some of the topics into a little bit smaller segments so that you can jump on and just watch something very quickly on a specific topic that you might want. So, and again, I know we do this at the start of everyone, but it's part of our mission is to get out education to our clients and referral sources about different areas that we feel like affect our clients' estate plans. So today, talking about inheritance tax. So let's start with who pays the tax. So in practice, what typically happens is that when someone passes away, the estate often pays the tax because the will say that the tax comes from the residue. So a lot of times when we're administering an estate, the Pennsylvania inheritance tax is actually paid from the estate. However, technically, under the eyes of the law, Pennsylvania inheritance tax is owed on the recipient or is owed by the recipient who receives the asset. So it's on the beneficiary's right to receive the asset. That's where Pennsylvania inheritance tax actually comes into play. It's just that a lot of our clients, when they pass away, are putting in their wills or maybe as part of their estate plan that they want the tax to be paid from the actual assets in the estate, when in reality the burden of the tax is on the beneficiary, on the recipient. So the will, like this next bullet point says, the will sometimes will say that it's paid out of the residue of the estate. If there's no provision in the will saying that it's paid out of the residue, then the tax is applied to the share inherited by the beneficiary, whether that's part of the residue, whether it's a specific bequest, whether it's by a beneficiary designation on a non-probate asset, or whether it's by a joint account. What is taxed? So there's a common misconception that if you can avoid probate, then there's no inheritance tax. Unfortunately, in Pennsylvania, that is not how it works. You can avoid probate, but the assets still may be subject to an inheritance tax. So the assets that are going to be taxed would be real estate, tangible personal property, any business situated in Pennsylvania, regardless of where the owner is domiciled, any intangible personal property of a Pennsylvania resident, any gifts made within 1 year of the decedent's death, if it's greater than $3,000 per recipient within that year. Now, items that aren't taxed would be real estate and tangible personal property located outside of Pennsylvania. So if we have a client that has real estate located in Maryland, that Maryland real estate is not subject to Pennsylvania inheritance tax. Life insurance death benefit proceeds are typically not subject to inheritance tax. Social Security death benefits typically not subject to inheritance tax. Any debt that would be considered worthless, meaning that it won't be able to be recovered, that would be considered a worthless debt if you can't recover against it, so there's no inheritance tax on that. IRAs, 401ks of a non-disabled decedent who would be under the age of 59 and a half, and then 529 plans located in Pennsylvania are not subject to inheritance tax. Now, the inheritance tax rate depends on the relationship to the decedent. So there's 0% tax between spouses, there's 0% tax for charities or government entities, there's 0% tax for inheritance from or to a parent, and that would include adoptive or step if it's from a child 21 or younger. There is, however, tax of 4.5% for parents to grandparents or for any lineal descendant, that's natural, adopted, or step. 4.5% for inheritance by a spouse of a widow or widower of a child. And then that's when the tax really jumps up, 12% for siblings, 15% for anyone else, and that includes nieces, nephews, aunts, uncles, cousins. Anyone that doesn't fall into those smaller rates would be at the 15%. How do you avoid Pennsylvania inheritance tax? Oh goodness, that is the question that a lot of clients ask. So you can do it by investing in exempt assets like life insurance, 529 plans, real estate located outside of Pennsylvania. You can also avoid inheritance tax if you make gifts within the year that you die, as long as it's less than $3,000. So, for example, adding a child to a deeds means their half interest avoid inheritance tax when you die, as long as you've done it, you've added them to the deed longer than a year before your death, or if the value is less than $3,000. But if your child does die before you, then you would have to pay inheritance tax on your child share. So that's the risk that you run when adding children to the deed. You can use non-grantor trust, where you're divesting yourself of the asset by putting in trust. And the thought is that you've lost enough control over the asset that it's no longer treated as part of your estate, so you avoid inheritance tax. Now, the thing that I always like to make sure clients know is that when you avoid inheritance tax, sometimes that means that the beneficiaries are going to pay more in income tax and capital gains. Because, for example, if my parents transfer real estate to me and they survive that transfer by a year, I won't pay 4.5% inheritance tax, but my basis or equity in the property is whatever my parents' basis and equity in the property was. So if they then die and I sell it, I might have a larger capital gain where I'm paying 15% on, where if I had paid the 4.5% inheritance tax, I get a stepped up basis. So whatever the fair market value of the property is when my parents pass away, that becomes my basis. If I turn around and sell it, I might have zero capital gains to pay if the stepped up basis is equal to whatever I'm selling it for. So I paid 4.5% tax, but I avoided the 15% capital gains tax. So whenever I have clients that are talking about avoiding inheritance tax, I always like to talk to them about the consequences for income taxes and capital gains taxes, because sometimes paying the inheritance tax is better. Now, if you leave it to a spouse, again, it's 0%, but remember, it's 15% for unrelated individuals. That being said, you shouldn't get married just to avoid the tax. I never think that that is a good reason to get married. But if you have a long-standing partner and for whatever reason you haven't gotten married and it makes sense for other reasons, the benefit is that they don't have to pay the 15% tax. This is exactly what I had just mentioned. The next question is, but do you want to avoid it? And that seems attractive, right? If you can avoid a tax, that seems like the attractive thing to do, but there is a cost to that, and the cost is that you lose that stepped up basis. So the example is property that was purchased for $50,000 is now worth $200,000. The basis is $50,000 for the person who owns it, so potentially there would be a capital gains on the difference between the $200,000 and the $50,000. But if I just wait and receive it when someone dies, I do get that stepped up basis equal to $200,000, whatever the fair market value is on death. So I pay 4.5% on $200,000, but then when I sell it, $200,000 is my basis, and I'm selling it for $200,000. That means I have zero capital gains, which is important because capital gains is 15 or 20% depending on my adjusted gross income. So again, sometimes avoiding the inheritance tax isn't always the best thing. Pennsylvania inheritance tax rate is 4.5% for kids. Capital gains is 15% or more if the income is over for adjusted gross income. So it's really easy to end up paying more in capital gains tax. So we will often intentionally set up trusts so that they are subject to Pennsylvania inheritance tax, so we do get that stepped up basis. If we have collateral relatives or friends that may be inheriting, then avoiding the Pennsylvania inheritance tax may be a higher priority because the inheritance tax rate for those individuals is 15%. The capital gains rate is 15%, then it really doesn't matter. And if the person is planning to keep the property, then it's better to avoid the inheritance tax. Now, assets that are exempt from inheritance tax, avoid this completely, because if it's not subject to tax, then we don't have to worry about that. Now, the Rev 1500 is the Pennsylvania inheritance tax return. That's the tax form where you report your assets, the date of death value, and where you actually pay the tax. So the Pennsylvania Department of Revenue wants to know what assets the decedent had, what their date of death value is, who's ultimately going to receive it, because that determines the rate of inheritance tax. And then you're including documentation to support what you're putting on the return. Plus, you might have some deductible expenses. There might be funeral costs if you had to advertise the estate, if you're taking a personal rep commission. All of those would be deductions that you can take on the return. So usually once you file the inheritance tax return, and you have to file, the deadline to file is 9 months after the decedent's date of death unless you file an extension. So usually once you file, it takes the Pennsylvania Department of Revenue 4 to 6 months to review the return and get back to you whether they're accepting what you disclosed on the return as the value and the tax that you paid. So that's why Pennsylvania takes so long to wrap up an estate, because you have to wait for the Department of Revenue to review the return. They may approve the return, which is always our hope. They may say more tax is owed, or they may give a refund, because if you prepaid the tax, you have the option to pay the tax within 3 months of the date of death to get a discount. Sometimes when you do that, you don't have all the deductions accounted for, so you might actually get a refund. Now, those people that are not Pennsylvania residents still may be subject to Pennsylvania inheritance tax if they own real estate that is situate in Pennsylvania, or tangible personal property, or a business with a situs in Pennsylvania. However, if they live in Maryland, they're only going to be taxed for Pennsylvania inheritance tax purposes on the assets situate in Pennsylvania. So they wouldn't be taxed on their other assets, stocks, bank accounts, all of that. But they do need to file a non-resident inheritance tax return so that they're paying the tax on those assets. Deadlines. These are important. So you do get a 5% discount on the inheritance tax if you pay it within 3 months of the decedent's date of death. And normally what you're doing is you're estimating the tax so that you can get the discount on the most that you can, understanding you might have some deductions that trickle in. That's why you can pay the tax within 3 months, but the filing deadline is 9 months after the date of death. You can get a 6-month extension if you want. You just have to make sure you file that extension before the 9-month deadline. And then you have to make sure that the actual payment is still due at the 9-month mark, or interest starts accruing. So if you file an extension, you still want to make sure you're paying the tax by 9 months, even if you're not going to file the return until 6 months after that, because otherwise interest starts accruing on the tax that's due. Consequence of not paying the tax is currently there's an interest rate. Now, it's not a very high one, but it's an interest rate each day the tax is late, which is about 7% per year. The Department of Revenue can place a lien against you or the property if you're not paying the tax in the appropriate time. And sometimes we have clients that have administered an estate and they overlook assets, or maybe they're not aware that they need to pay the inheritance tax. So eventually that will have to be straightened out with the Department of Revenue. They'll send a notice, and then the client has to figure out how they're going to pay that tax. Okay, hopefully this brief overview of the inheritance tax was helpful. You can reach out to our office. We're at 20 East 6th Street, Suite 206 in Waynesboro. You can reach us at 717-655-2676 to schedule a consultation. And we love to talk about this type of tax, as you can see by my excitement and passion. But a lot of times we're trying to figure out the best estate plan to address our clients' concerns. And if it is to avoid inheritance tax, there are a lot of different ways we can do that, and we'd be happy to talk to you about that. So I hope this was helpful. Again, always check out our YouTube channel. We have all kinds of videos that we try to post and refresh them regularly. So reach out to our office if you have any questions or concerns. Thank you, everybody.